What is going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. I want to go over what the hell is happening, what the data points are saying, and everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So right now, there's about 1 minute left in the trading day, currently down 4.37%, kind of low volume. So 30.6 million shares being traded, 36.8 is the average. So kind of low for that. And it was another day that institutions were somewhat selling. First thing, you saw some abnormal buying. So I gotta point that out. And so this is what really caused this right here. And when this did occur, I had absolutely no idea because there was a lot of negativity in the broader market. I believe even just the S&P was down, I think like 1% in pre-market, the futures. So there's a lot of things influencing SoFi. So let's go over what is really happening. So today you did have tech unveiling their earnings. So Google and also Tesla, not necessarily the best. So you just had that kind of looming over the broader market. Then at the same time, you had manufacturing data coming out and it was below 50. So that does show and signals more of a slowing. So not necessarily the best. And I'm going to talk about what Canada did today and why that might be somewhat relevant to the States. And then, of course, you had last minute power hour sell-off. Like I said in my pre-market video, that was going to happen as last minute jitters associated to GDP coming out tomorrow. So kind of a crazy day nonetheless. But like I mentioned, Canada was the first of the G7 countries to cut interest rates. And today they actually did a second 25 basis point cut. That's been one thing that was really fueling the States and the optimism. So right now there still is that likelihood of a 25 basis point cut for the September 18th meeting. And if anything, now this has gone up slightly. So now a 8.4% likelihood of a 50 basis point cut. And then for the November 7th meeting, you have a 59% likelihood of another 25 basis point cut. So right now, the market is wanting cuts like ASAP. But I did a video, it was probably like 2-3 weeks ago, where I said there's different ways to interpret rate cuts. One of which is to combat inflation. And obviously if inflation has gone down, which based on the last CPI data has, like that is justified reasons to cause rate cuts to occur. Second part is to avoid a recession. And that's one thing that Canada did cite, is that they are cutting rates to avoid a recession. So I think just with a lot of the data points that is out there, people are very, very fearful about a recession. So over the last like 48 hours, a lot of chatter about recession has just surged so much. So once again, you have all those different points looming over the broader market, causing a little bit of a downtrend. Today, there was no actual news from SoFi itself, no SEC filing, so kind of just, again, piggybacking of the broader market. Today, shorts did return 212,000 shares. 16.93% of the free float is being shorted. That works out to be 175.82 million shares. This was, in all honesty, very surprising that they did return some shares. Again, that is net amount, and only because shorts have been returning over this last little bit. And you would have figured with the negative news that did come out, they would have pounced, but they didn't. So it makes me feel that they are either, I don't know, trying to wait for GDP or PCE over the next couple days to really justify increasing, or maybe they just see SoFi being a good value play for their upcoming earnings. Again, letting you know about that. So when it comes down to some of the data points, so 5.51 million in calls, 1.65 million in puts. Sentiment wise, 46% of all the options being done today were optimistic and bullish. But if we do look over here, you saw a lot of call options roughly at the closest strike price at that 750. So that clearly was majority done by just shorts hedging. So even though it was net returning some shares, no doubtably there was a lot that was increasing. And you can tell that based on just the intraday first thing right there, that teal line. So all in all, kind of interesting stuff. Looking at the open interest though, you do have 4,000 at that 650, 9,000 at the 7, 31,000 at the 750, and then 51,000 at the 8. Kind of a pipe dream now to think of $8 being realistic going into upcoming earnings. If anything, it's kind of fighting for where it's at. So I said in my pre-market video that if this $7.21 was to break, which at first it kind of struggled and flirted with it, bounced off of that, trended clearly a lot higher. But if this was to break, then it was going to be a little bit more in free fall, if that kind of makes sense. So as it stands, it is trading between this pivot and this R1. So 675 is going to be that next strong support that you'll want to watch for. And then 721 is now going to be converted to resistance. And so all in all, next 2 days are going to be very volatile, so anticipate both extremes to be touched. You just have to, that's kind of the nature of the game, regrettably. So hopefully FOMO does kick in, GDP and PCE calms the broader market and causes more of a buying opportunity. But I think based on the consensus is that there will be more further blood in the broader market. So not necessarily, again, the best kind of scenario and how this is all playing out, but on the actual chart itself, so it is lower percentile of the boiling band, and it did also break below that 100-day moving average. So most likely the next stop would be, at least for the strong support, would be 690. So that would be the 50-day moving average. So it lasted a good week and a half above that 50-day moving average. Again, it has been a good year and a half, or possibly even 2 years, that it's been above that 50-day moving average. So once again, this is why I like to analyze a lot of the data, and maybe big money did kind of feel that something was coming. So in my video yesterday, I did say that randomly institutions were selling. A lot of people kind of were speculating that they were anticipating a downtrend or whatever else, but maybe they truly foresaw what was coming from big tech. Again, it's kind of hard to speculate, but this is why I like to analyze a lot of the data points. It kind of pieces together what might be coming. And so as of right now, looking at stochastic though, you do see it at roughly 64, so kind of neutral territory. You do also see at the same time a bearish deviation, so red line above the white as well. Number of retail investors have been getting out. So all in all, not necessarily the best. There hasn't been any recent analyst ratings. So last one was done 7 days ago. Jeffries, John, who has right here a 61% success rating. Latest Morningstar report, this hasn't been updated in a very long time, which is kind of weird. So I don't know why Morningstar still does show $13, but nonetheless, it still does show the fair value being $13. And just to quickly pop over to IBKR, or to the Elliott Wave Technicals, so it does have $6.94 as a strong pivot, which, like I kind of mentioned, is that 50-day moving average. So if it does break below that, then it is anticipated to kind of hit between that 645 and 617. And then on the flip side, if it is able to kind of hold that support, then this is what is anticipated, at least in the short term. So 850 to 880. So clearly you can tell there is a lot of volatility on both spectrums, so just be comfortable with that. But at the same time, it'd be kind of crazy going into SoFi's earnings in the mid sixes. So let me know your thoughts on SoFi. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. Give yourself a shout out. Did you buy today? Did you sell? Were you part of these individuals that were kind of taking profits or whatever else? And again, I say this time, like all the time, always recommend you guys like learning options. Because for instance, when it was at the $8 mark, you could have easily locked in, you could have sold covered calls, you could have done a lot of things where you can kind of benefit from both extremes, whether it's bullish or bearish. So just take the time, educate yourself, learn options. Very, very profitable, regardless of, because again, you can go multiple different directions. Just looking here, you can see that at that 750 strike price, there's obviously calls being purchased, there's puts being purchased, or even being sold. So there's a lot of different ways that you can do that. I can also do a dedicated video all about different strategies, just very basic stuff that you kind of can benefit from, right? So right now, if you do anticipate SoFi to potentially trend down, then you could always sell calls or buy puts. So again, both of those are options. Or let's say you were planning on buying SoFi right now, you can also sell puts. So if you're going to buy it at these prices, you might as well just sell a put. That way you get some additional premium, kind of lowers your average essentially. But enough of me ranting. Don't forget to hit that thumbs up. And with all that though, appreciate all of you watching.